from Manhattan Venture Partners. Santosh, hi, morning. How do you see this setup? Do you think it's going to be more prolonged than expected, with Iran digging in its heel on conditions which US may not accept?
Absolutely. I think there's no question about it. This is going to go on for a long time. Uh, Trump has his own demands, and both are pretty rigid on what they want. Uh, I'm sure there's a middle ground somewhere, just based on internal compulsions. But at this point, no one wants to bend. Iran wants to run the clock till the midterm elections. Trump doesn't want to give up on this thing. He thinks he's won the war, and he's not going to settle for anything less. So he needs an out. Everybody needs some exit out of this. So right now, I don't see anything. The temperature is heating up, and it just gets worse every day. So I know there's some mediators in between, but I don't know that's not going anywhere. So we'll see. I think this thing is not good, and you're seeing that in the market. The market is sensing that the resolution is nowhere close at this point.
Hi, Santosh. This is Harsha.
Hi.
Santosh, curious to therefore try and get a sense of how you're thinking about this. And clearly, President Trump doesn't feel that there is any risk to the midterms, right? It seems he seems quite comfortable with the way things are, at least based on the statements he's making.
Yes. It's pretty surprising, but he knows that he's caught in a bind right now. Ideally, he would have loved, or his Republican colleagues would have loved to kind of lower the temperature, get to some kind of a medium ground, and then rack it and just kind of increase it after the elections. But at this point, he thinks there's no turning back. We've spent a lot, we're losing people, and he needs to show something for all the money and time that's gone in there. He has some good points going for him. The Democratic Party has its own issues also. There's a fight going on between socialists and moderates and all that. So that's playing also. History is not on Trump's side, because historically, in the midterm elections, the president loses. The ruling president always loses. So that's against him. But we don't know. He may not lose that badly. It's not a, but it's definitely he would like to resolve it. And I was listening to some Republican senators also. I think they are not very comfortable with this. So this situation, but they know that they cannot let Iran have a nuclear bomb. They're set on certain ways. So I don't know what's the breaking point here, but at this point, no one is bending, and it's going to go on for a while. So let's see another few weeks. But then on the other side, we have our own issues here. So let's see what the inflation data is tomorrow, the CPI, how that comes in, and how the Fed reacts and all that. So we have the other things going on. But the the whole thing, the urgency of this whole thing is not there, because the underlying earnings of companies have been spectacular. This quarter, I think earnings are expected to grow 54%, and next quarter is also going to grow. Analysts are already raising estimates for next quarter. So the underlying fundamentals are good. Just the geopolitical tension, we don't know where that's going. That's kind of will start weighing in more and more. At this point, it hasn't shaken the boat yet, but at some point, I think the fears of inflation will come into the picture at this point. But we don't see it yet.
Santosh, so you're saying that the earnings growth is outweighing the macroeconomic risks which are there, whether it's inflation, whether it's labor softness, which has come in, and till the time you have a good earnings growth, the street may be looking more at the positive side and ignoring the macro.
Absolutely. I think what you're seeing, according to one estimate I was reading, is that the AI-induced efficiencies is really expanding gross margins and expanding margins overall. So the profitability, it's really flowing down. We saw the Microsoft earnings, Amazon earnings. They're spending a lot, but they're still showing a profit. So it is possible to make money even after spending so much. So that fear is kind of going away. So investors are getting comfortable with the AI spend that's going on. Then we saw this big deal yesterday with the Nvidia and all the other big guys pulling in money or helping them raise money. So I think that's a good thing. So the financing is there, demand, and the NVIDIA CEO emphasized the point that the demand is outstripping supply. So that AI sector is going to really be strong, continue to be strong, and that's going to help the market overall, help the indexes stay up. And it's also the market is broadening. There are other AI-enabled companies are also doing very well. So I think the market is broadening. That's healthy. So only thing we really need to resolve is this war situation, and if that is resolved, if the fear of oil spiking up beyond, like going above 100 or close to 100, that if that fear subsides, I think we are off to the races to the end of the year.
Santosh, with all the action that's happening, you still seen a much more tempered move with regard to crude. You believe the worst is over with regard to crude, or you still believe that if tensions were to flare, you'll still see 100 or 100 plus on crude? Is that something that is a low probability, if at all? You can give us a sense.
Yeah, no, that risk is there, very much there. So let's see how far this goes. I mean, if both the arteries are cut off, the Suez Canal and the this one and the Hormuz, I think that that'll be a big blow. At least I know countries are trying to find alternate sources of oil, but it is definitely very disruptive. And at some point, it is going to cause friction. And even the U.S. oil reserves, I think they're going to start, that's at the lowest point for a long time, since a long time rather. So I think they need to kind of refill that. So all that is going to really spike up the oil demand and oil prices. So I think that's the fear at this point, that oil, it needs to be controlled, this thing. And we saw that today also, the oil prices was up. So we need to control that. It's not very conducive. Oil beyond 100 is totally on the cards, not in the immediate term, but it's not ruled out. So you will see that the risk is there. The risk is elevated, and I hope they come to a resolution. But at this point, both sides are hell bent on their point of view.
Then the equity markets, Santosh, they're completely in a zone of their own. I mean, they seem to be brushing off all of these fears altogether. You believe that that's a little bit overdone, or it's just earnings momentum and therefore largely justified?
No. I think it's going on fundamentals. Like I said, earnings have been great. I mean, they have beat consensus estimates also. It's over 54%, I think, year over year, or quarter over quarter. Last one was up 50%. This one is more than 50% earnings, EPS on a year over basis. So that's a good sign that the companies are making a profit. It hasn't disrupted that. Now, one fear, I'm not saying everything is all clear. We have to look at the job market. We lost 20,000 jobs. The economy shed 20,000. That's not a good sign. If that continues, I think I mean, the Fed chair is more focused on inflation. He thought the labor market is pretty much steady going. But if that starts also getting weak, I think then it's again he's good. There's some worries out there. So hopefully that kind of pulls back. Hopefully that's not a trend. It was just a one-off thing, and we get back on track for the going forward. But inflation is definitely a big thing. And when is he going to raise rates? That's the big thing. September looks like it's going to be off because of the soft labor market and hopefully the soft inflation tomorrow, inflation data. But I think one rate hike before the end of the year, I think he's on the cards, and that'll be good actually if we need to control inflation.
You sit in the US, and therefore you're primed to give us that perspective. You've got, we were speaking with Rajiv Agarwal just earlier this week, and he was saying that crude on the gallon, petrol, diesel rates have gone up by 30% in the US. But that doesn't seem to be translating fully to the CPI print yet because of the volatility, is my guess, and because of some amount of cushion which I believe is being provided. But give us a sense, inflation, you believe that it will start creeping up from here? How much is that inflation print going to creep up by, and by when? What's your broad thinking there?
Yeah, well, let's wait and see. I think the headline inflation number is always high, has been high for a while now because of oil. The core, that's the bigger concern. The core, which X's out energy and food, that is pretty sticky, and that's keeps going up, and that needs to come down, and it's not coming down. So, and everything is going up in prices. So I think that's what he wants to control. It can go up quite a bit. I think the last the University of Michigan data that came out, they're expecting inflation, the survey expecting inflation to be around 4.2% going up from here. So through the end of the year. So I think, yeah, the expectation is that inflation will be high for the rest of the year. So he wants to really stop that or curb that or get that expectation, control that expectation. Just other than the actual number, it's the expectation of inflation which is more dangerous than more painful than the actual inflation number. So I think he wants to control that. He wants people to know that he's very serious about it and he's going to go after it, whatever. So he didn't show it yet, but hopefully his rhetoric meets his actions pretty soon. Because that's what the market wants. And the reason the market shot up, the stock market fell and the bond market went up, is because they didn't think that he was very serious about cutting inflation. So hopefully he is serious, and all the committees that he's put together, they come with their consensus, and he has a strategy going forward, and he gets inflation under control or shows that he's working towards it. I think that will be good enough. So I think that's where we are. So inflation is definitely creeping up, expected to continue going up, but let's see how long. If he raises rates, I think it'll curb it much faster.
And therefore, what's the impact on economies like India if this rate hike were to come? Will it delay the flows coming into India? What's the India outlook?
Yeah, I think it's going to raise the dollar price and the yields are going to be higher here and the money is going to flow back here. The risk reward is going to be much better in the US. So that's always a bad thing when rates go up, dollar goes up, and bond yields go up. So it's not really very conducive for the emerging markets. So let's wait and see where that is. But I'm sure countries' reserve banks are kind of factoring that in already. The one rate hike it's been very well telegraphed already. So I'm sure they're making arrangements or working around it to plan around it if it does go up.
Okay. Santosh, you've been generous with your time. Thank you so much for coming in and giving us that perspective.
Anytime. Thank you.
Thank you.